$200 per day trading. Is it possible? And if so, how do we do it? Well, if you've been in the trading space for any amount of time, you're probably used to traders throwing around big numbers like $10,000 or $20,000 per month. And these figures, fortunately for you, are completely attainable. But when you're just starting out and you're not yet making money trading, you should bring your expectations down and focus on building out a system that will allow you to achieve your first $200 per day. So with that said, let's get to the learning. Now, the first thing we need to do is talk about the math behind $200 per day. Because the truth is, in trading, we cannot win every single day. Some days are going to be losing days. Some days will be break even and they won't provide us any setups. So in order to achieve our $200 per day, we actually need to do some averaging out and turn this process into something longer term. So running the math behind $200 per day, we have 20 trading days in the month. This equates to $4,000 per month. And this is the overall target that we should be looking for. So we want to average those profits out to achieve $4,000 per month instead of aiming to make $200 every single trading day. Now, to achieve this $4,000 per month or $48,000 per year, we do not want to focus on taking 20 trades that make us $200. Instead, we want to focus more so on taking 2 trades that make us $2,000 or something of the like. Now, obviously, with small capital, it's not easy to make $2,000 per trade. Okay, if you're trading with $100 or $1,000, you are never going to do this. And I want to remind you that account flips simply do not work. You might flip a small amount of money into something larger, but if you continually try to do this, you will eventually hit a losing trade or a streak of losses, and you will lose all of the money that you have in your accounts. So it is a very short-term way to trade. We will not be focusing on account flips. Now, in order to achieve your goal, you need to look at your profits as percentages. This is the most efficient and long-term focused way to trade. If you can look to make a realistically attainable percentage return month after month, this is the best way to ensure that you get to that $200 per day mark. Now, a realistic profit that you can attain regularly will be between 4% and 6% per month. Now, I know you might have been brainwashed into thinking you can make 20% per day or 10,000% per year. Simply not true. I urge you to try it for a year and see what your results are if you really do not believe me. 4 to 6% can make you one of the best traders in the world. It will make you consistent and you will be able to join the very small few successful, long-term, consistent and profitable traders. So running this math then, if we're aiming to make around 4% per month, let's say, we are going to want around $100,000 to trade with. 4% of 100,000 is $4,000, which means we need to get access to this $100,000. But that doesn't mean you need to save $100,000 of your own money. And it doesn't mean you need to start taking out loans and risking money you don't have. See, what we have today are companies called prop firms. These are proprietary trading firms, and they will give you money to trade with if you can prove your skills. So here's one I like at the moment, FXify. If we go to their programs, we'll look at the 2-step. This is the most common. Basically, what they do is allow you a way to access large capital for a smaller price. You purchase an evaluation, you prove that you can trade, and then once you've proven your skills to the firm, they will give you an account that has this amount of money in. You can trade it and generally keep up to 90% of the profits. So take a look here. If you join a $100,000 account, it's going to cost you $499, and that's a one-time fee. Now, it is refunded to you if you pass the evaluation. You get to trade and keep up to 90% of the profits once you've passed. And to pass, all you need to do is make 10% and then 5% without losing an overall drawdown of 10%. There are a bunch of different firms you can try out. There's some links to a few with some discount codes in the description of this video, but we don't want to start here. This is where we have to begin the process of going through the steps to actually get yourself ready to get one of these accounts that we can then use to make $200 per day. All right, so step 1, what you need to do immediately right now is to stop trading with real money. The problem with trading real money early on is you are distracting yourself from all of the free time that you could be improving. So immediately stop trading with real money, and instead, for the next 30 to 60 days, I want you to trade a demo account. Now set this demo account balance at $100,000 because this will align you with when you go into an evaluation and you're trading $100,000. You'll be used to it already through this demo trading. And in order to build your skills and get yourself ready to take a real evaluation and start making real money, you need to be trading a plan, which means you need a step-by-step system for the trades you take. Now, fortunately, I've created a pretty simple system, taking some elements of what I trade with and put it into a small strategy that will act as the foundation for you. So now, let's get into that. The simplified system that I'm going to share with you takes some of the elements from my core system and puts them into an easy to apply approach. Now, this is by no means an optimized system, but based on the backtests I've done, it can be enough to get you to where you need to be in making that $200 per day, and it's very, very simple to apply. The strategy uses 3 different concepts. The first concept, and the core one, is going to be market structure. Now, when we see a market forming higher highs and higher lows, like this is an uptrending market. So through this market, we only want to look to buy. Now, a market that is forming lower lows and lower highs is a downtrend, and this is a market in which we would only look to sell. Once we've determined which way we're going in the market, such as this market here being an uptrend, we want to look for imbalanced supply or demand zones. A demand zone is a consolidation area before a large up move. And what a demand zone shows us is a price level that traders were happy to pay for an asset. So we see this as kind of a discount price region. And basically the theory is when the market comes back to this level, we are likely to see a continuation because we are going to see new buyers coming in at this discounted price range. Now, the term imbalance that I just mentioned simply refers to an open price range. And generally, after we bounce from a demand zone, or after we form a demand zone and rally away, an imbalance will be left open. This is what we use to validate the entry for the trade, because if a demand zone doesn't have imbalance leading into it, it's not one we would want to trade from. So, for example, we can see this demand zone here was retested once already, so we wouldn't want to use this demand zone for a second retest. If the market manages to come down here, it's much more likely to actually keep trading down. So the simplified system suggests we will look for a buy from imbalanced demand in an uptrend, and for targets, we can either target the next high or we can target an open imbalanced area in price to the left. Now, for selling opportunities, if the market is in a downtrend, we look for supply zones, we sell supply, we put a stop above the high, and then we just target to the downside into either the very simple target of the recent low or lower if we have reasoning to do so. So it's incredibly simple, and it's not a super high win rate strategy. You'll see some statistics soon, but it is enough to get you to where you need to be, and it's very, very simple to do. Here's an example. And for the backtesting, I use the hourly time frame only. So this is what I would suggest starting with if you're going to practice this system yourself. Now here on the hourly time frame, we can see the market has pushed up and broken some structure here. And also on this lower time frame, it's continually forming higher highs and higher lows. So we know this market is in an uptrend. Now the next thing we want to look for is imbalanced demand. Well, there's a demand zone just here, which is the last candle before the impulse away. And the imbalance is this open price range that we are seeing just here. So this is what we want to see when we're looking for imbalances. We want to make sure that it hasn't yet been filled. If we take a look at this big push away, the market hasn't yet filled it. So this is still a valid demand. Now, as we said, targets wise, we can just use the high. This is the simplest way to trade it. If you want to extend targets, you can generally do that by looking for imbalance to the left and looking for open areas you can target into. But the most simplistic way to trade this will be targeting just the recent high that's formed. So in this example where we are in an uptrending market, we are going to want to look to buy demand with a stop below the low and a target that will go into the high that has just formed. Now, if we allow this trade to play out, you'll see we get the retest, which would trigger our entry. And then because we're in an uptrend, we have a reasonably high probability of seeing the market continue through and trade into the target, which is the recent high. So this, as you can see, would have been a winning position. And this is the kind of format for trades we want to follow. Now, as I said, we're taking these trades on the hourly time frame. Hourly is a nice accurate time frame and will provide enough trades for us to make reasonable profits. And this trade would have returned 3.69% at 1% risk, which is almost your $4,000 monthly target done in one single trade. So here we have a downtrend. We have a push down, a lower high, and then a large push down again. We have an open imbalanced supply zone. We could place our selling order on this supply zone, stop loss above the high, targets down into the low, and then allowing that trade to play out. We are looking for a tap in and then a trade down towards that target. Now, as you can see, this trade does just that, and it does fill us a 6.7% profit, which means you could actually go and lose 6 trades in a row and you'd still be seeing profitability on your account. Now, this system is very simple, and there are going to be a lot of opportunities to take losses, which means the win rates for this system are only going to be around 40%. You are going to lose the majority of the trades you take, but because of this risk-reward edge, it doesn't really matter because we can still come out on top. As we've said, we only need to win 1 in 6 trades at this rate to remain profitable. Step number 2, now that we've covered the system and you've stepped back from trading live, focusing on demo for a bit, is to backtest data for the strategy that you're going to be using. Now, whether you're going to use the strategy I just laid out for you, or you're going to learn something else, you want to make sure you've got back-tested data. It's where you use past price action and trade it in a simulated setting to see how your system performs. Now, this is where you build experience in applying the system and also build confidence by seeing it work as well. You must not skip backtesting because if you do, you're going to lack the real ability to apply the systems in the market. It's all good seeing a strategy, but until you apply it yourself over the longer term, you're going to struggle to make it profitable for yourself. Fortunately for you, I took it upon myself to do some backtesting of this simplified system before I put it out. So I backtested over 3 months. It's not the largest sample of data, but it's a good start point. And we can see over the 3 months of trading, we achieved 12.83%, which equates to just over $4,000 per month or just over $200 per day. Now, the strategy doesn't have the highest win rate, but this is fine because we are winning a lot more on our winners than we lose on our losing positions. With only 6 wins and 9 losses, we still managed to achieve that quota. So with a bit of refinement, this system could be very, very good. And even as it is, will allow you to hit your target profits. Now you can see based on the average risk to reward, we are winning 3.41 times our losses on average, which means if we risk $1,000 on a trade and we win, we are going to make $3,410 back, meaning 3 losses are accounted for every time we win a trade, which is great. You can see here that our winning trades are much larger than our losing days, which is always what we want to see. And this is the importance of averaging out, as we said as well. You can see that 7% of the profits were attained in April, 4% in May, and then June was a pretty flat month where we were profitable, but only by 0.81%. Now, this is why I say you can't focus your efforts on making $200 per day every single day. It must be averaged out into larger time horizons, like months, quarters, and years. Some days, weeks, and months are going to be really good, while others are going to be really slow. But the backtesting that I'm suggesting you do will give you all of the data you need to trust in the strategy that you're going to use to make your $200 per day return. So to round everything up, is it possible to make $200 per day trading? Yes, absolutely. Now, as we said, in order to reach this target, we need to average things out onto larger time horizons. We can't focus on making $200 every single day. That is never going to happen. So you need to get access to that capital and then use your strategy to take larger trades that will average themselves out into $200 per day over the course of a month, a quarter, and a year. Now, the strategy that I showed you today is very simplified and watered down, but it can get you there. Now, if you want to improve upon this system, I've got a free course called 7 Steps to Profitable Trades, which will teach you more about the concepts I've covered today, as well as other concepts and how to turn this all into a trading system. If you hit the link in the description, that will take you straight through. It's totally free and you can watch it right now. That can act as a very solid foundation for building a more optimized system. So if you're going to follow this plan to reach your first $200 per day trading, I highly suggest you do that. With that said, thank you for watching this video. Hit subscribe so you can get all of my future videos as well, and I'll see you in the next one.